Income tax 2020, tax software example, adjustments to income, half of self-employment tax. Come in, relax with income tax 2020. Here we are in our Lacerte tax software. You don't need the Lacerte tax software in order to follow along, although I believe they do offer a free 30-day trial in some cases. So if you can get access to it to practice with, I think that would be a good tool. But we're basically going to be looking at the Form 1040 using the tax software to make adjustments, to look at different scenarios, jumping back and forth then from the data input to the tax return to see what the impact will be. So we're going to start off with our standard scenario here. We have the single tax filer, Eric Smith, living in Beverly Hills, 90210. And then we've got the wages down here. We're going to start off in the standard, meaning they have W-2 wages. We're then going to be moving to where they have a Schedule C business, our concentration then on the deduction of part of the self-employment tax related to business type income. So that will be on Schedule 1. So our focus then will be ultimately go into this line item for the deductible part of the self-employment tax. To understand that, however, we got to go briefly into the Schedule C type of business or business that's income that's going to be subject to self-employment so that we can see how that will work out. We're going to talk more about a Schedule C type of business in future presentations when we focus in on it specifically, but we just want to add it here so we can understand the relationship between that deduction and the self-employment tax as opposed to basically W-2 income and payroll taxes. So we'll start off as if we have the W-2 income, 100,000 W-2 income as we've seen in the past, standard deduction 12,400 that's being taken. That's going to give us the 87,600. If we then mirror that in our Excel worksheet here, 100,000, 12,400, there's the 87.6. If we let then the software do the calculation for us on page 2, we would then have the 15,110. So I'm going to say, okay, 15,110, 15,110. And remember, our focus here is really just on the self-employment tax, but we want to just touch in on these other items. We'll touch in on them in more detail with relation to the Schedule C and other items in future presentations. And also note that some of the calculations for the forms credits and whatnot are not currently out at this point in time. So we're working with the software that we have at this point in time. We'll focus in on credits and whatnot in future presentations as well. So if we go then back to page 1, our concentration now is on this W-2 income. So if I do the data input, or if I go to the data input for the W-2 income, note that as I enter this 100,000 for the federal income tax, it cannot calculate the federal withholdings, but it does automatically calculate the Social Security and Medicare if I put in the proper Social Security and Medicare wages, because those are basically flat tax. So in other words, the system kind of knows what those are, and the assumption is, of course, that the employer took out the proper Social Security and Medicare and paid it directly to the government already, because that's what they're obligated to do. And because it's more of a flat tax, they should have done that already, and therefore the Social Security and Medicare should be basically just informational things on the Form 1040 if you're a W-2 employee. In other words, you shouldn't be adding the Social Security and Medicare, but only calculating the federal income tax, because that's the only tax that has not yet been paid if you're a standard W-2 employee, due to the fact that the employer already took the responsibility of taking the money out for Social Security and Medicare and paid the exact amount already for it. So let's just think about what was paid for Social Security and Medicare, because that's in essence what we will be dealing with the self-employment tax. So in other words, the 6,200 divided by the 100,000 is 6.2%. So Social Security is basically a 6.2% flat tax. There's a cap and whatnot. We won't get into that, but 6.2%. And then 1,450 divided by the 100,000 is 1.45%. So basically what's taken out of your paycheck that's not federal income tax, but Social Security and Medicare, if you were a W-2 employee, is basically 0.062, 6.2% plus 0.0145 for Social Security and Medicare. That would be the 7.65%. Now, if you're a self-employed individual and you report your income on a Schedule C, the IRS basically is saying, I think that you guys should be paying Social Security and Medicare. And they basically are going to say, I'm going to charge you or act like you are the employee of your own business. I know you don't have any employees, you're not doing any W-2, but you are kind of like the employee of your business. You're generating income. So you must be acting as an employee in order to do that if you're the only person, that is acting there. So they kind of, say that the owner is basically kind of like an employee. And not only that, but you're also kind of like an employer. And so notice that when you're a W-2 employee, you only pay the employee portion, but the employer is also matching that and they're paying in as well. So the IRS is basically saying, as a sole proprietorship, you are not only the employee, but the employer. We're going to charge you then Social Security and Medicare on the earnings that you have, not just the 0.0765, but basically, and it's not exact, but times 2, basically, the 15.3% of that, because they see you as the employee and employer. And then they're going to allow you to deduct half of basically the employer portion of it. So let's just see what this would look like. If I was to say, okay, now let's say they're not a W-2 employee, but they make their income from a Schedule C income. So I'm going to say drop down, we're going to say Schedule C income. This would be basically an income statement for Schedule C. I'm just going to type in the 100,000 for the sales. Now, obviously, we would typically have expenses, but I'm just going to put 100,000 in the one line item and see what we get on that. Back to the forms. Many things will change now. One, the obvious change is that we still have the 100,000, but it's not in line 1. It's now in line 8. This line is supported by the Schedule 1. So if I go to Schedule 1, there's the 100,000 that's pulling over to the 1040 line 1. So that's pretty straightforward. But we also have this thing that popped up here, and this is related to the adjustment. This is what we're kind of focused on at this point. This is on Schedule 1. And then it's going to be on part 2. So there it is. And you might say, well, where did that come from? What is that doing there? And it popped up automatically by the software. And it basically says it's the deductible part of the self-employment tax. Okay, so we got to know, well, what is the self-employment tax? How did that get calculated? Well, we can then go, that's on the Schedule C. We started with the Schedule C, and we had the 100,000. We didn't put any deductions. We just kept it simple, 100,000. That's going to be like the net income on the Schedule C in essence. That then we would calculate, we pull it over to the 1040, and we'd also have to calculate self-employment tax, which would typically be done on the Schedule SE. It's not out yet. We'll talk about that later when we get to the Schedule C, so we'll drill down on that at a future point in the course. But we can see it up top on, say, page 2 of the 1040. So we have this page 2 where we have the tax calculation is now at the 9964, and then we have this amount here, which is the self-employment tax. And before I get to, I just want to mention that on page 1 we also have this item down below, which is going to be the qualified business income deduction. I'm not going to talk about it a lot. It's very significant, obviously, but we're not going to talk about it now as related to self-employment because we're basically focused in on self-employment. But this has an impact, of course, on the tax calculation for the federal income tax now being at that $9,964. And then we have, this is the thing we're focused in on, this self-employment tax. The self-employment tax now calculated at $14,140. So if I think about that, well, what's the rate they gave on that? The $14,130 divided by the 100,000 is about 14.13%, which is close to 0.062. That's the Social Security for the employee portion plus the 0.0145 times 2. Right, so it's close to basically twice the Social Security and Medicare that would be deducted from a sole proprietorship. We'll get into the exact calculation in a future presentation, but in essence, we see that $14,130 now being added to the tax, which is huge, a big problem over here. Don't really like that. But then normally, if you were a Schedule C employer, you'd get to deduct the employer portion of the taxes you paid. So I had to pay the tax, but I should be able to deduct half of it, basically, if they're trying to mirror me as a sole proprietorship to do kind of a similar thing as if I'm both the employer and the employee, as what would happen if we were talking about a Schedule C type of business where the employer pays half and the employee pays. So I should be able to deduct half of that. So in other words, if I take this 14130 divided by 2, I should be able to deduct half of that, Now, I can't deduct it on the Schedule C. They couldn't say, let's just add the deduction to the Schedule C, because it would result in a circle reference, because then I would be calculating the net income after the deduction, then I'd be calculating the tax on the thing after it was included. It would be a circle reference, kind of like in Excel when you see a circle reference. So they had to put it somewhere else. The somewhere else is going to be on Schedule 1 on Part 2. So that finally gets us to this point where we have the deductible part of the self-employment, which is 1/2 of the self-employment tax. So when you see this pop up here, typically it'll be generated from the software, but you want to know what is happening when you enter the data. You're going to say, okay, we had some income subject to self-employment. Usually that income is something like a Schedule C. We had to pay self-employment tax, which is basically similar to payroll taxes, Social Security and Medicare taxes. And then we get to deduct half of that, which was included now over here. So we have this here. And then on page 2, we have the tax that would be calculated. So that's going to be basically the story. And then this is going to roll forward to then the first page of the 1040. So if I was to kind of mirror this in our Excel worksheet now, I'd say, okay, we got the 100,000 in Excel is not coming from a W-2, but it's now coming from a Schedule C. So we're going to say we got the Schedule C is 100,000 that we have there. If I go back over here, we're going to say, okay, and then that's the 100,000. We still have this standard deduction here. So if we go 100,000, we still have the standard deduction, but then we have the 1/2 of the self-employment tax. And if you think about the self-employment tax, you can say, all right, the tax calculation on page 2 was 14,130. So I'd go back over here and say, okay, we got an adjustment to income, which was the self-employment tax, which is equal to 14,130 divided by 2, 7,065. That's going to pull over to the first page. That brings us to the 92,935. So I'm going to say, all right. So if I go back to the first page, we're going to say that brings us to the 92,935. We have then the standard deduction. So we got the standard deduction. That looks good. And then we have this qualified business income deduction. We'll get to the calculation on it in a future presentation. And our focus isn't on that at this point. This is what was computed by the software. We'll drill down on it and talk about it when we get to the Schedule C. But 16,107, I'm just going to put that in for now. I'm going to say 16,16107, and that'll pull forward. Notice I added that line just so we can have it there for the Schedule C, and that's going to bring us then to the 64,428. I changed some of the color in here, so 64,428. So there's the 64,428. So then if I go then to page 2, when we calculate the tax, now we've got the tax here, and we also have then the other tax that's going to be included, self-employment tax. So I'm going to put that in here. I'm going to put what we had before, 15,110, and now I'm going to say, okay, so now the tax, the federal income tax is the 9964. So now it's at the 9964, which is different in large part because of, you know, some of the deductions that we had there, some of the adjustments that we had and the deduction. But now we have the added tax of the other tax, which is self-employment, which I should probably have another worksheet for, but I'm just going to pull it in this way. We're going to say that's going to be the 14,130. So I'm going to say, okay, this is 14,130, 14130, and that's going to give us to the 2494, the 2494 here. And so that brings us to that bottom line of 2494 as opposed to the 15,110. Now, I don't want to get into a big difference between these yet because, again, there were some things that we want to concentrate on for the Schedule C. But just note that when you look at these difference, you're going to say, well, that means that if I have a Schedule C business, it looks like I'm paying more taxes. But it's not really the case necessarily, because if you're a W-2 employee, you already paid half of the Social Security and Medicare. It's just that got taken out of your wages already. You know, it already got taken out and it's already gotten paid. Whereas if you're a self-employed person, then you're going to be calculating the Social Security and Medicare. You may have made payments on it already for the Social Security and Medicare, but it's going to be included on the tax return right here generally as a calculation that's included on the face of the tax return, rather than just being a line item on the W-2 that just basically verifies that the employer did what the employer is supposed to do, which is take the money out of your wages directly and pay it to the government. So this self-employment calculation can be confusing when you go from a W-2, especially if you're talking to someone that goes from a W-2 employee to a sole proprietorship, and then the self-employment tax kind of pops up here, as well as the federal income tax and whatnot. It can be a little bit confusing. So that's why I touch in on that. So if you do add the Schedule C, then again, you're adding a pretty good deal of complexity to the calculation, especially this deduction, which is fairly new as well. The qualified business income deduction is a little bit confusing. Self-employment's a bit confusing. And then you can have other issues that we'll talk about in future presentations that are related to it. They could be a little bit confusing. You can use planning. There's more planning and estimated tax payments and whatnot that are useful for it. So just note that if you're when you're doing your business, if you're running a business for tax preparation, you want to know, are you focusing on business type of entities, Schedule C businesses, S corporations? Do you want to take those on? Or are you focusing more on basic tax returns and you're doing larger quantity of basic tax returns? Or are you getting larger profit margins from more difficult tax returns? And typically you want to know where your focus is on that.